G'day folks, welcome back to another gold and silver update. Today we're looking at the prices which have bounced, but overall in the medium term at least still possibly bearish. So I'll have a look at the charts in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, first off, as today, March 5th, gold prices have experienced fluctuations due to global economic uncertainties, including trade tensions and currency movements. Similarly, silver prices have been influenced by both industrial demand and investment trends, reflecting broader market sentiments. The sudden drop in gold and silver price at the end of the week trading was primarily attributed to weak local demand and concerns over global economic conditions. So first, looking at the silver price, we look at the long-term trends first. On the monthly, we're still above the moving averages here, giving us a bullish signal. Likewise, the CCI 150 is also above its respective moving averages. And again, for those new to the channel, those moving averages are available in the description below. There's a video there if you want to learn how to draw them on your charts. So bullish movement on the monthly. On the weekly, the price is somewhat neutral, I would say. It's hitting this moving average range, although notice the CCI is broken down and it's been declining since. That's because of this bearish divergence. We've got lower highs on the CCI versus higher highs on the price. It actually broke down, hit our 23-38% minimum Fibonacci range. And for those, again, new to the channel, we measure that minimum range. We take it back to that. We take it back to a significant low before that divergence started. And we measure the 23-38% level. You can see there it's sort of bouncing in that range for a number of weeks, and it finally bounced out, and now it's returning back to that 23% level. So on the weekly, it's somewhat neutral, I would say, if not bearish, although the price is still above that moving average and pretty much consolidating. On the daily, we've got this, it's bounced off this major resistance up there at 34.87, broke through this previous minor resistance at 33.40, and that's currently now another minor resistance, and it's bouncing down. You notice it's broken below the moving averages, giving us a bearish signal. And notice on the CCI it's also been bearish. Now at the moment it's broken into that moving average range of the CCI, giving us a neutral signal. So again, just looking at the long-term trends, on the weekly I would call it neutral, and on a daily it's somewhat bearish to neutral as well. Now if we go to the intraday charts, we basically we only trade in the direction of the higher time frames. So if you're trading on the daily, go in the direction of the weekly, and if you're trading on the hourly or the intraday, I'm showing you the hourly here, you trade in the direction of the daily. So at the moment, avoid going long or short, and if you're going to trade, I would suggest it's probably more of a risk, but again, I'd prefer to trade when the daily's trending lower, below the moving averages on both the price and the CCI. But at the moment, you'll notice here we did have a bullish divergence, lower lows on the price versus higher lows on the CCI, and that's a bullish divergence, and the CCI has been rising since. Now at the moment, again, we measure that to see how far it's broken up. You can see there it's broken up past that 38% level, and it's currently bounced off that 50%. It could go higher. At the moment, the CCI looks like it's still bullish on the hourly, and we may see further upside. But again, just be cautious. I'd prefer to be more confident going long. I'd like to see this break above on both the CCI and the price to take more bullish trades like it did back here, for instance. Now looking at gold, it's been very bullish now since around January 2023. It touched that moving average range back then. There's no CCI for it, but still very bullish, as you can see from the price chart on the monthly. On the weekly, we did have this bearish divergence, and it's still in play actually. That CCI is still dropping. Lower highs on the CCI versus higher highs on the price. Now it's come back last week with that bearish candle and making a bit of an bullish move at the moment this week so far. So I've kept that in there. Haven't drawn a target for it yet, but just looking at that versus the daily, that's the weekly. So somewhat neutral to cautiously bearish on the weekly, although the price is still rising. On the daily, you can see there's a long-term bearish divergence as well. Now, I probably made a mistake here, but I'm going to consider this in alignment with the weekly at the moment. Let me first draw another bearish divergence. You can see here from between those highs there on the price, higher highs on the price, same period back there, lower highs on the CCI, and that's still dropping. That's currently in a bearish momentum at the moment on the daily. So if I was to draw a Fibonacci on that, between that high. Now it's already hit that range. If I pull back the Fibonacci to that level, you can see there the 23 has already been hit. But let's take it back to this area where there was a minor support. It's already been hit as well. So I'm going to leave it there. Now, let me just try and align this to, it's close enough. It just sort of magnetizes itself to these little bits there. So that wick has already hit that range on a daily time frame. Now, if you look back on the weekly, and if I draw a Fibonacci between that high and that low, you can see there that's a 26.85, 23% level, which coincides with this 26.85 on the daily. So I'm going to leave that in there for the moment, although we could see a fall or decline if that drops. And if we pull the Fibonacci back to that level, that's a 26.40, which again closely resembles that 26.85 there. So again, Fibonacci retraces and divergence on both the weekly and the daily. So at the moment, cautiously bearish on the daily at least. So if we go to the intraday chart, again, we take predominantly bearish trades based on the daily, but notice here we had a bullish divergence. We've got lower lows on the price for the same period. In fact, sorry, from back there actually, we've got higher lows on the CCI, and let me just move that. That should be from there. So again, you can see there that bounced up from that bullish divergence. And if I was to draw a Fibonacci retrace back to that resistance area, you can see there it's broken up through that 61%. It easily broke through that 23-38% level if I was to draw a target range in that range there. So it's easily broken through that range and it's broken up past the 61%, which indicates a possibility that we may see further upside. But notice at the moment we've got a bearish divergence, a bearish CCI trend at the moment on the CCI and also the price. Now if we go to another chart, back here we've got this multiple indicator, which again is in the description if you want to learn how to draw it. Every time the indicator breaks above the +2, it draws these blue arrows, and if it breaks below the -2, it draws these red arrows. Now I don't trade these in isolation. I trade them in a direction with any divergence. So you can see there, this is the daily chart. In accordance with this bearish divergence, we've got a whole cluster of red arrows, which means the price was going to decline and eventually did. So that would have been a confirmation, if you like, selling or shorting after it hit this resistance up there. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.